Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. Really, the markets are finally starting to rock, especially when you look at what gold and silver are doing.
The central banks around the world holding firm with their rates. They're not hiking, they're not lowering. There's some talk even from some Fed members that they may even have to hike later this year. How's this news working out in the stock markets?
Well, yesterday in the United States, Jerome Powell, he testified, and in the testimony, he released a statement, beforehand, and you can read on the Federal Reserve website, and he said that the Fed is at the peak, the end, basically, of its hiking cycle. And if as long as inflation doesn't increase from where it is now, which is around 3%, he said in the question and answer period that he's looking to lower rates. As long as it stays where it is now in the next couple months, he's going to lower rates. And the thing about it is, when last year came to an end, people were thinking the Fed was going to lower rates in January or March, and that's what the Fed fund futures were pricing in. And then January came around, and the inflation data didn't improve, and those rate hikes got pushed out to May. Now they're being pushed out to June and July, according to the Fed fund futures market. In the beginning of the year, the market dipped a couple of days, and people were worried about this. Oh, they're not lowering rates fast enough. But I think what people need to realize is that if you forget about when they're going to lower their interest rates, what particular month it's going to happen, the important thing is they have no plans to hike. I mean, there might be a Fed governor or central bank minor figure here and there that might talk otherwise, but the chairman's not saying that, and that no one really believes that they're going to hike. So the next move is going to be a cut. And it's just a matter of when it's going to happen. But I think the reason the markets have been rallying, and there's been increase, I would say, in rampant speculation, evidence with the moves recently in the crypto market, with Bitcoin going above 60,000, and even these minor cryptos exploding even higher, the complete junk. It's just a sign of wild speculation. There's no sign of recession. Inflation is not 3%. And the Fed is basically saying, we're not hawkish. We're not going to raise rates. That's what Powell's saying. So I would say the Fed hasn't raised rates enough to make inflation go away or cause recession. And they're all poised to cut. It's like, to me, the situation is similar to late 90s when Alan Greenspan was in there and created what people called back then a Fed put. I would assert that Powell has created a new Fed put, and I'd even wonder if at this point, they realized we don't need to lower rates. The stock market hasn't dropped. The economy is in recession. So let's just save interest rate cuts for later in the year, closer to the election, and try to do things then. So we're in I think, an overall dovish environment, and if you want to think about having some safety in your account, I think now is where gold and silver really play a role in that, because at some point I do think the bubble will peak out and deflate, and gold and silver will benefit when that happens, and they're benefiting now already.
Yes. Now, are some people trading their gold in to buy Bitcoin?
Well, I mean, if they are, they're being completely foolish. Central banks aren't doing that. They've been buying gold for the past, over the past year, accumulating it all over the world. The Chinese central bank, the Russian central bank, other central banks. They certainly aren't buying Bitcoin, but, there probably have been some people that have sold mining stocks, individual investors that sold the GDX ETF or other ETFs or individual mining stocks and trying to chase the Bitcoin as it went up, and people are talking about that. So I'm sure there's some small players doing that sort of thing, but I don't think serious money's doing that. I mean, that's completely a dumb thing to do, in my view.
How long before this new gold mania starts picking up the stocks for the gold and silver miners?
Well, so when you see a gold move develop, and I think this is the start of one, typically what will happen is gold will outperform silver. Gold comes alive first, makes new highs before silver does. And the mining stocks the big cap mining stocks, start to play catch up, and they've just begun to do that. They haven't even caught up with the price of gold. Newmont, Barrick, and many others are much closer to their lows than their highs. Even if you take not the all-time highs, but just the highs of November, December. So they got to reach those levels, and I think once they do that, people will start to then trickle into the smaller mining stocks. But a lot of them are making big moves off the lows too. I saw last week or Monday, several up like 10% on that session. So they are starting to make big moves off their recent lows. But they kind of track silver, when silver will go above $30 an ounce, that's when I think the masses will recognize, oh yeah, silver's moving. Oh yeah, mining stocks are moving. I want to get on that. It's like Bitcoin. Bitcoin has been going up for several months since October, and then now that it's over 60,000 that the masses want to now chase it. Now, in a desperate hunger to buy it, thinking it's going to go to 100. Maybe it will. I don't know, but it's when silver gets above 30. I would guess that's when some of these people will start thinking, oh, I want to be in the silver because it'll go to 50 or 60. Well, why not just buy now when it's a little lower than 30 and not think about where it might be in 90 days or it could be in a year or 2 years? Because I think, at some point the entire the rampant speculation will start to deflate out of the markets, and gold and silver will play a role. In the 2000s, gold and silver bottomed in October of the year 2000 and outperformed the stock market for 12 years. And I think something similar is going to happen.
Is this the time then to stock up on silver? Well, before the masses, as you said, catch the drift there?
I certainly think it is, and to do the same with the mining stocks too. In a way, when you're asking me when will people catch on, I think the rally is going to continue, and it's still early in the rally, but people don't catch on to the rally continues for several months. So I think we're early in the game, and it's a good time to be buying now. That's my view. I actually bought some silver over the weekend, physical silver, and bought more mining stocks on Monday. And I might buy more, So that's what I'm doing. I'm not buying crypto. I'm not buying any of that stuff, even though I do think it's possible Bitcoin could go up more. But I don't care, because I'm also thinking not just where things might go in a few months, but in a couple of years. And I have no confidence that Bitcoin will continue to go up after this move and it's over, whereas I do think that gold and silver are stable investments that will go up for years, not just a couple months. So you get long-term capital gains and sleep well at night.
And again, one of the problems with cryptocurrencies is that they take a terrific amount of electricity to mine, and governments like China say we don't like that. And then they say we're banning cryptocurrencies, and then the next day, oh no, they're okay. These government flip-flops, do you think they could become permanent because they just don't like the drain on the power grid that might be needed for important things like cooling in a heat wave or heating when it gets cold?
Oh, for sure. In an emergency situation, they cut the power off those mining companies, those crypto mining companies, if they felt it necessary. But, you think about China, I don't own shares of it, but there's a company called Silver Core that has silver mines in China. Well, they're not going to shut down the silver mines because they need silver. These metals have a use to them in the real world. Crypto doesn't. And that's a huge difference.
We'll have more with Mike Swanson right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, are you into commercial real estate at all?
Well, I had bought REIT stocks from time to time, and I bought some last October and November because they pay good dividends and so forth. But I actually sold them early in February, and I sold some other. I own mining stocks right now, but in early February I sold a lot of stuff, holding my gold and silver because I'm just getting more cautious personally on the market. And I'm willing to sell early. I don't care if I miss out on a rally or even if it goes up the rest of the year. In 2022, after that meme stock mania happened in January, February, I was out of the market. And I was saying, I think the market can go up, but I don't care because the internals of the market were deteriorating. The number of stocks in the market going up was going down, and more stocks are going down than up, in starting in January, February 2022. And I was saying, look, this is how bull markets end. It doesn't mark the end, but I don't want to be in it when it ends. I want to be able to watch it end without being in it. And so when 2022 happened, I'm sorry, I'm getting the years mixed up. In 2021, that's what I was doing. I got out. That's when the meme stock thing happened. So in 2022, we had the bear market. I wasn't hurt. I wasn't in the stock market because I'd sold out 10 months before the peak, and basically went to cash. Now I sold out again of a lot of stocks, that I own, including real estate stocks, with the notion that this bubble is now really getting out of control. And I think it could be like a situation. When I was trading in the 90s, I was trading internet stocks in 1999 and making money, and I was a day trader. And I didn't have as much money as I did back then as I do now. Now I have a lot of money. And I was in my early 20s, back in the 90s. And at that time, people like John Templeton and Warren Buffett were saying, look, these internet stocks are a bubble. They're going to crash. We're not buying them. And John Templeton shorted them, and he made a killing when the bubble popped in March 2000. And now here we are, and I'm older, and I got more money, and I kind of got their attitude. These cryptos are garbage. The stock market bubble is inflating. We have an easy policy Fed that's poised to make even more crazy, money flow into the markets by lowering rates when inflation is still here. And the bubble is going to get bigger. And we now have a debt growing problem. The debt to GDP in the United States is 125%. And it's going up faster than the CBO predicted it would a year ago. And historically, when it gets in a country to 130%, which we're on track for about 12 months from now, things stall out. And I don't want to be around REITs and other stocks hoping they'll go up more. When that happens, I'd rather just be very cautious so I can look at things as objectively as possible And I believe gold and silver are going to go up anyway when that next bear market happens. So I'm happy to be playing that now, thinking I don't have to worry about it when the overall macro environment changes, because I think they'll benefit from it. So I'm focusing on the trends I think are going to work now and a year, 2 years, 5 years from now. And I don't know what in the world is going to happen with REIT, Walmart stock or Target stock or NVIDIA stock. And I think these cryptos are going to completely crash when the stock market does top out, whether that happens, in the fall, in July or next January. I'm not sure right now. I can't look that far ahead. But that's what I see coming, over the horizon. But it's not visible at the moment.
Mike, is the secret to good investing not knowing when to get in, but when to get out?
Well, I mean, the simplest thing someone can do is diversify. You don't have to really time things as exactly as I've been talking about trying to do. You can just diversify. And people have been taught, look, have like 50% of your money or 60% of your money in stocks and the rest in bonds. Well, we now are at a point where that strategy doesn't really work. It failed in 2023, or 2022, because bonds and stocks fell together because of the debt situation we now got. We're not in the secular bull market in the bond market anymore. So you have to have an alternative. That's what gold and silver now plays as a safety trade that can go up when bonds go down. So the 64-40 portfolio is out. So that means some people should have 10% of their money in gold and silver. I was playing up until last week with 14% allocation to gold and silver metals ETF. Now I boosted that to now I've got 20% basically. All I'm saying is people should have something, at least 10, I would suggest. And they can hold that, and they don't have to time everything, and that will go up when the bonds don't work as expected. So, you can figure out how much you want to allocate to stocks and bonds and keep the precious metals now in those accounts and just navigate things that way. So that you don't have to time things exactly. There are people who, I can't remember the guy's name, slipping my mind, but in the 80s, people just look up permanent portfolio. He was before my time writing this stuff. Harry Brown, that's who I'm trying to think of. He come out with a concept called the permanent portfolio, something similar to what I just advocated, but with more investments in it. Think in that direction, and you can navigate these markets without trying to time things and come out ahead of what most people are going to go through over the next 5-10 years.
Crude, as long as China's economy is in the dumper, is crude going to remain down?
Well, I would think not. I think crude, I think, has got a good floor around where it is. It's held up very well the past couple months, even with the news in China, and we come down, obviously in crude last year. So I think crude's okay here. And the thing about the gold and silver is that when gold goes up, yeah, the silver ends up following gold and eventually going up more. But so do other commodities. The move in gold historically is a prelude to a broad-based commodity bull market starting 6 to 12 months later. And other metals go up too. People should look at the chart of platinum. Palladium went up 10%, I think yesterday. So these metals are jumping. They're on lows too, but they can, go through their 50-day, 150-day moving averages and start going up. And if they do that, there'll be a signal that soft commodities are going to go up. Oil usually is actually one of the later ones that lag. So, I think energy's good. Energy's likely to go up more over the next couple of years. It doesn't do much right now.
Mike, anything else we should be keeping a close eye on right now?
Well, just to sum up, I think people need to take a hard look at every commodity, and you'll find interesting charts and things to buy and trade, and really invest in. I think this is a trend that's just starting, and the one that I'm going to be focused on now the rest of the year.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or for any of our guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.